It wasn't the best entry, but still generated 35%. So it's about win number 4. We start off with this campaign by first defining what the campaign really means, and it's basically just kind of making sure that you have a set number of tasks before you execute, and then if you do that over and over again, you bring about a particular result. So that's kind of what the campaign is. And the reason of the campaign, the purpose of this particular campaign is to take advantage of the morning volatility with a non-correlated strategy. So we have lots of different types of strategies, and this one is specifically designed to take advantage of the morning volatility. And we've given it a name called a morning master gap reversal, and we're going to try to master that, and we're going to use the market internals to help us, and basically the laws of statistics. So far it's been working actually much better than I expected, and hopefully it continues like that for the next 5 to 10, 15, or into the end of the year. Started off with 1,500. So actually I started this campaign back in April, and it's been actually working pretty well. I've always traded gap reversals, but now I've created it in such that it's easy to understand for those who are wanting to master it. And we started off with 1,500. Currently I'm at 6,900. I've taken more than 7 trades. And then our goal, basically what we expect from this campaign, is just to generate $6,800 basically using $300. Okay, so that's because I've only used $300, and continue to add a little bit more to the position to help increase the returns. The advantages is basically one of the advantages of this is it just takes about an hour a day. So 30 minutes before the market opens, and another 30 minutes after, maybe 60 minutes after the bell. And today was another example of determining the price of the contract on exit. So I think I bought those 850 calls when they did collapse. It didn't collapse to the point where I wanted it to collapse, but I could afford 2 contracts. So I bought those 2 at $3.15. And then I typed in the sell limit order. Right here at 560. I think they actually hit as high as $6. So that was at the open, and I think it was just taking out those pre-market gaps. So that's the advantage there, and also the routine is just a procedure. So you got step-by-step things that you look at, and here's an example of some of the contracts that you want to probably look into getting with lower risk. So if you're just starting, then you probably want to go and find the contracts that are trading around 62 cents to $1. And I also opened up the $900 calls at $1.07, and then they close off at $1.40. So that's another 35%. So it's working. Like, you just can see that the morning volatility introduces both bulls and bears an opportunity to make 35%. And it doesn't rely on the market. The market was somewhat flat into the open, I think, but lower. I think Tesla was gapping down 2%. And then, you don't have to swing, but when you do, you can hold runners when you have additional profits, but it's not recommended on the first trade when balance is at 1,500, because there's going to be a lot of opportunities for that, and you want to try to grow your account to double it so that you can use some of the profits you have to taking some other different types of risk. Organizing the trading day and prevents to mitigate vicarious trading. Yeah, so today was a day where we could have taken some risk on the puts, but that depends on what kind of trader you want. What's your plan? Is your plan just to get the first 10 trades out of the way, and then use that profit to take some additional risk, maybe from another server? That's up to you. Okay, so the disadvantage of this campaign is that you're only taking one trade per day, or one or two, and you have to, and this is a mistake from before, and you have to accept, are you willing to accept a 35% return with a probability of success of less than 95%? And I think so far it's greater than 50. And that's the question you have to ask yourself. Are you going to take this using accepting this criteria, or you want to just continuously trade like 10 times a day and figure out what the balance looks like at the end of the day? So I went through the campaign gap reversal expectations using a $300 initial trade investment. Or trade investment doesn't make sense. Trade. So that capital that I'm using from the 1,500, I'm using $300, which is 20%. And over the course of 5 trades, you should see profits coming in based on in this column here, with respect to the number of trades you've taken. So on the 6th trade, I'm on the fourth trade. So the cumulative profits from the 4th trade should be at $915. So we'll take a look. The details of this campaign, we want to have a time frame that we want to end this at, so 4.5 weeks. So I initially wanted it to be 4, but because there's one day we might not take a gap trade, then I added 0.5, so it's 4.5 weeks. And you should expect to see $188, the average for the first 10 trades. And then again, the initial position size $300. Max position size as your account grows is 20%. Your absolute minimum position size reverts back to $300. And then your minimum position size as your account grows is 10%. Okay, so you can see how it's not very complicated, but you need to know quickly what your absolute is, what's your 10% going to be, and then every week you want to adjust the allocation because you want the account to grow at an exponential rate. An exponential rate using the gap reversal strategy. So this is the bread and butter here. Okay, so it's done for you. And even if you have a bit of a bad entry, it seems like it still works very well. So you got to kind of keep this in mind. I think the trend today hit trying to zoom in here. It hit 1.5, right? It came close to it in the first two 30-minute, the first 2 candles on the 3-minute. And then it definitely reached it by the 9th and 12th minute. So it worked out. So we were in this scenario looking to get a greater than 60% return, but we only got 35. And the reason is because there was another gap in Tesla that Tesla wanted to fill. That was at 724. Okay, so I guess if we were quick enough to think about the second gap and looking at 1.5, then we could have taken some puts to fill that gap as well, and that would have been a pretty good trade, those 2 trades. But we ended up just taking one, and that ended up, it was a little bit difficult, but it still provided us with a 35% return. Okay, so like in summary, the campaign is a gap reversal, very simple, but I think in the Tesla trade there was two gaps, right? So one at 746 and one at 724. And then we're using the market internals as an edge. So that provides us clues. As soon as it hits 35%, I should have probably looked to attack the second gap at 724. And then when you open up your contracts, you open up and then execute the sell order at 35%. Okay, so when you buy some contract at any price that you get into, for example, if you bought it at $1, you put in a sell order immediately for 35%, maybe for one contract or two, right? If you want to be done with the day, you can put in two orders. So I'm keeping a ledger at the end of each of these PowerPoints, and that's important to track, so we can see how the campaign is going. And again, 1 or 2 trades per day. And if you do lose on one trade, right, so don't worry. Like for example, if you lost today on one trade, then look for another gap tomorrow, right? There's going to be a lot. So the routine is how to prepare for and what to expect. So basically the same idea. At 4 a.m. you'll see the lines set, meaning the pre-market prices. And then in the morning at around 6 a.m. I'll be discussing or alerting about what type of opportunities there are in the markets. So I identified first thing in the morning Tesla. So in the first part of the morning, before the market opened, there was a risk off type of setup in the VIX, because the VIX was trading green, slightly green. It was only like up 1.68%. So at that time, I think Tesla was gapping down 2.2%, and the contracts that I wanted to get were the 850s, but I also got the 900s. And when the market opened, those contracts dropped from 595 down to 315. So I bought them at 315, and they actually went down as low as, I bought them at 415, and it went as low as 315 or 365. So even when I bought those contracts at the open, having seen the Tesla price being down 2%, it took away almost $1.80 from the 850 contracts. So that's a pretty good. That's not the greatest decay amount. It actually decayed even more down to 380, 360, 75. So the entry was obviously not the greatest. So then I picked them up anyways at 315. And I was looking to close one contract at I bought them at 415. So that's there was an error. And then I was looking to close at 560. So you could just simply multiply 4.15 with 1.35 and you get 560. That's exactly 30%. And then it closed at 560. And then I actually moved up to $6. And but then it stopped. It stalled because it filled the gap, and then I closed that out. So from 415 to 560 with two contracts. That's about $280 profit. Okay. And then I also opened up a $900 call, because that was the one that actually hit $1, almost to $1 if you had a limit order. And then I also closed those off at $40 with profit. And then I took those profits and then I gave the $900 a shot, but then that didn't work out, not realizing the gap at 724 was still active with the trend being at 1.5. And then I opened up the $900 again just because the market was down 5%. I'm still using a little bit of my profits from my gap reversal trade to see if we get a nice bounce tomorrow. Okay, so now I'm going to just basically post this here. So that's the part of the routine. So that's something that I've been doing here, talking about the potential trade, talking about the VIX. Okay, instead of just making these assumptions about the political political assumptions that everyone's trying to crash the market, we're using the trend here and the VIX to kind of give us some early signs of what we can expect from the market, and concentrating on just the gap reversals, right? So 18. So that would be the routine. So it's very similar to like waking up and brushing your teeth. You would just look at the markets, see how the VIX is doing, find the strikes that you want to get, and then see if the percentage move can drop those contracts enough so that you can buy in with your allocation amount. So I was hoping that Tesla would drop much more than 415. It did. It dropped dollar down to 375. And I wanted to change the strikes from 850 to 900, but I just still went with it because I was trying to get the bottom of one of the candles at the 3 minute, using the 3 minute time frame. But it pushed down even lower, but I still held because I'm in the morning volatility looking for 35%. So the next slide. So I pull up the next portion here. The alert was made. And we executed pretty much 2 trades. That's the 850 calls Tesla, and these are the contracts expired next week, right? They're actually moving very, very smooth, and the spread is not that wide. But we opened entry at the open was 415 times 2. So, I mean, I should have got the ones that are worth $1, but that's just me. So that's my account because I'm already up, and I can afford 2 of these contracts. So that's going to cost $830, and then the exit price was 5.6. So one was 5.25. So we'll just do it separately. So 5.25 minus 4.15, 5.6, right? And then 4.15, that's $145, right? And the next one, $5.25 minus 4.15 is 1.10. And then the next one, $1.07. I only got one contract. Okay, so that was, and that goes at 1.35. So that's a $28 1. 1.32. $26. So if we add them up, that's 1.1 plus 1.45, and that's $26. So the total profit, or gross profit, is $281. Okay, so then when we take this is when we take that and we added to here. So then your gross profit is just basically 624 plus 281, which is 905. Gross profit as of May 18th is 905. So let's see if I can. Shit. So it's obviously not the most exciting type of trade, but it's pretty damn consistent, which is why I'm just introducing this to everybody back in May, so that you got some routine going on, and once you have enough profits, you can take some of that and do some lotto. So where are we right now? When you take over, look over here. So I'm going to add that 281, which is 905 for 4 days of trading. So on day 3 we were above, and now we're slightly under, right? So we're kind of fitting this model that's working. Okay, that's everything was there alerted, and you can see how it works. But it's not like you put in $900, you make $10,000 type of trade. And those there was one opportunity in Tesla on the 670 puts that went from $2 to $8, even probably maybe even moved up to $9. So you could have taken one contract or two contracts of those for $400, and then you could have made $800 a piece. That's a $1,600. You would close them off at $1,600, and then because you opened it up with $200 a pop, then your gross profit would be $1,400 or $200. So there are those trading opportunities, and for those big risks. But the morning volatility model is specifically what I'm focusing on, and it worked pretty well for the fourth trade. So on Thursday, I'm looking to do the same thing and to see if we can get another win out of this gap reversal. And it worked. It worked for both Nvidia. It worked for pretty much most of the stocks in the first 30 minutes. Like I saw Nvidia pull back. The reason why I like Tesla is because the Tesla one, those contracts at the 850s and the 855s were moving very smoothly when the price would move higher. So I knew that the gamma was a good gamma. Sometimes you get that gamma because if the implied volatility is really low, the gamma, even it shows some sort of value where you're getting almost like a one-to-one movement, like they're moving in sync. So if the price would move up 0.25%, the premiums would move up by a certain amount. Well, that those situations happen, and it's because either you're way too far out of the money, or the implied volatility is really low, and then the decay is pretty heavy. So when we opened up the 855 calls yesterday, they were moving very smooth, and the gamma was really nice. So that's why I went back to the 850s, and then I saw the 900s also looking at trading at $1, which allowed me to just put in one more trade for those who didn't have enough, and they can get into $1, and those worked out as well for 35%. 30%? I think it was 30% return. So in conclusion, so far in the fourth trade, this is now my 8th trade. But the fourth trade, since I documented this was documented back in May. Let's just take a look. That first campaign, was it this one? Yeah, May 12th. So I started this campaign from scratch, right? Very, very generic. Nothing, and there's obviously the mistakes in some of the wording. But on May 12th, I wanted to create a campaign that's easy to follow and consistent, and has a routine for those who are okay with making 35% or more day in, day out. And then now I've revised it so that you can have a better understanding of what the thought process is for this gap reversal, and then know the kind of the levels of what the strike price that you're looking for. So that's with the trade alerts. And then went through the expectations, because every goals have an expectation at the end of the time. And then I've documented every single trade that I've taken on the gap reversal. Okay. And that's it. This campaign seems like it's a pretty good way of extracting 35% out of the market. And then I would recommend, once you reach like even with the onboarding alerts, once you reach double the account, or your what is it called, the goals, right? Once you reach 6,800, then you can open the more doors open for different strategies, right? But the whole point of this campaign is first master it so that you grow the account small but double, and then to a point where it makes sense. So this is not just an arbitrary number. 6,800 is calculated based on a 35% return on each trade. And then with small adjustments, you can get there a little quicker, right? And that small adjustment will be dependent on your confidence on this type of gap reversal opportunity. So once you reach your goal, that's $6,800 minus $1,500. That's about $5,300. That's like three campaigns, right? So 3 campaigns. That's basically, you can say, okay, you got 3 friends that you want to teach them. You give them $1,500. You're scaling now a strategy. Okay, instead of you taking such a bigger allocation amount, you can spread it out. And that's the strategy. So with 6,800, you'll have 5,300 to work with, or if the gross profit actually ends up becoming 6,800, that means that you have 6,800 plus your initial 1,500. You should be at around 8,300. And if your gross profit ends up becoming 6,800, then you can go ahead and continue this campaign. You can reset it, right? Because if you made 6,800 in 4.5 weeks, that's a pretty good monthly salary, don't you think? So 6,800 times 12. Well, we don't have 12 months left, but that's, if it was a full year, that would be about $81,600 at the end of the year if you just stuck with this particular strategy. Now, if you want to go ahead and venture into another business, then you would take some of this profit, 6,800, and then allocate, maybe let's say you want to do another campaign, but it's got a lower probability of success, but a higher profit factor, then maybe you would use maybe $800 and then assume that that goes to zero, or 500, whatever it is. You'd have to figure it out what you're willing to risk on that type of 10x trade on a Thursday or Friday. Okay, so let me just make sure there's any. I don't think there's any. I know there was a mistake from before. Probability of success is less than. Probability of success is greater than 60. Yeah. So this one, that Tesla gap is 724 filled, and it filled very fast. Slow at the beginning, but after the market started to pick up momentum to the downside, that trend 1.5 definitely signaled like the market was going to pull back. Another case of the trend being right. Okay, so I've documented everything here. Eventually this will all be put into a spreadsheet. I'm going to, I guess when I'm on the 5th trade, so my last trade will be here. So tomorrow I'll be looking to open up another trade at, hopefully we'll get a good gap. So maybe Tesla gaps up or something gaps up 5%. And it'll be on a weekly. I'll try to get weeklies for $1 or 62 cents. Now a lot of gaps happen on Thursday and Friday. I remember last week, Tesla was gapping up 7%, right? Roku was gapping up 4%, and everything was gapping up on Friday, I think. So when those gaps happen in a bear market, we want to be looking to get, we want to see the trend hit 1.5. We want to get those contracts as cheap as possible, and then let that morning volatility move the money into our accounts. Okay, and then you want to open up not just one contract, you want to open up at least 2 to 3. So I'm in a position right now, assuming I started at 1,500 on May 12th. I'm actually up a lot more than that. But with $905 of profits, gross profits, from using only $300, that's quite a bit, right? That's just using $300. Well, no, I didn't use only $300. I used like $600, $800 a couple times. So just using 1,500 plus the $905, I'm at $2,405 if we're assuming the start date of May 12th. And that's because I'm only using a 35% return on investment model rather than assuming a 50%, 60 or 70, anything greater than 50%. So by changing your return on your investment or your trade, the profits expectations, by reducing it, you can see that the probability of success increases to over 60, 70, 80, 90. Well, in fact, it's at 100% win rate right now. And it makes sense, right? You can, whenever you get in a trade, you can probably see like a 1% return, and that happens a lot, right? And then you want to push a little harder for 100 to 200 to 300. Well, if you're going to do that, you got to do that with after you master this campaign. Okay, so tomorrow, knock on wood, we get a nice gap, and try to look to open up a trade so that I can finish off this first campaign, or the first week of the campaign, with a profit total of $1,424, and that should be good for Thursday, and then I'll do it again on Friday. But on Friday, because we reached the 5th trade, I'm going to wipe all this out and then archive it, and then create a new PowerPoint presentation, which will have a date here. So this is May 18th. So the new date for the new campaign will start on the 19th. So 18th, today's 18th to 20th. Okay, thank you very much for your time, and have a great day.